Hello traders, the title of this video is Trading Systems Masterclass Part 4. If you have not watched Part 1, Part 2 and Part 3, you may do so before watching Part 4. In the first part, we were discussing the market. Second part, we talked about the market leaders. Third part, we were talking about analyzing the financial instrument itself, combining the technical and the fundamental. In this fourth part, we're going to talk about the market principle. I advise traders, I recommend to traders to stay tuned, and to focus, when they are watching this video, Very, very important. Market principle. When a trader is building his or her own trading system, he or she must align the trading system with market principles. If you see or you recognize a trading system that is violating a market principle, you must stay away from that trading system. The next thing, if you have purchased a trading system, you want to know the market principles that are governing the trading system. Otherwise, you're just going to go round, 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 round. Let me explain myself to you. One of the market principles that we talk about is that the higher time frame commands the lower time frame. Now, a lot of traders have heard about this 100 times and they are fed up of it, they understand it, they know it. But why traders continue to violate this simple principle? I want to give you one example, So looking at this chart, this is a Hewlett-Packard or a daily chart. A daily chart that a lot of swing traders use, also day traders also use the daily chart. So very often, traders are looking for chart pattern. They are not looking for market pattern. They are looking for chart pattern. Double top, V pattern, V top, round bottom, head and shoulder. This kind of pattern they are looking for. All right. Now, there is something else. If you see, where do we see a bullish chart pattern? We see a bullish chart pattern either in a rising channel or near a support level, or when the price breaks above the resistance level. That's where we are likely to see a bullish pattern. So if we see a bullish pattern, double top, double bottom, we want to know where is it taking place. We want to know. If we see, for instance, double top or double bottom at the wrong place, we need to be careful. All right, we need to be careful. If we see a round button or a V button somewhere, we want to know where, these patterns are taking place. How and when the pattern, develops. We want to know. Very important for us. So on this chart here, suppose this is, the price here, support the price here now, so I'm somebody who likes to trade, around key level. So, see that the price touched there. In fact, touched many times. Display kind of double bottom here. Now you can see he was approaching it here. At that point in time, I will be waiting for opportunity to buy. No problems. Now, but if for instance I'm using TSTWSY as usual 8, and then I switch to the signal time frame and then enter the trade. This is my setup. The price is retesting, a key level or support level. So it retested many times, went out, now it's coming out, it touched the first time, it can come in for the second time. This is my setup. The higher time frame commands the lower time frame. What we have said to traders is that three things we need, to make a technical trading decision: the setup, the signal, and the low risk entry point. Now, I want to stress on one very important point for traders that are following us. When you see a setup, suppose you are using a 2,4 SP material, you see a stochastic pattern, or you see area wave pattern, and you say, yes, George, now I have found my setup. Good. And you want to switch to your signal time frame and then find a low risk entry point. Nothing wrong with that. What you should do, in order to adhere to the market principle that the higher time frame commands the lower time frame, though your setup is happening on the daily chart, you want to check the weekly chart. You see now? So validate the setup, validate the signal, validate the entry. What we have noticed, though traders are now adhering slowly to the setup signal entry point, there's one thing they are missing. They are not validating the setup. So now we see this setup here. So we say, okay, it's a double bottom. We want to validate the setup. So validate the setup, validate the signal, and then validate the entry. If the setup is not valid, we will not take it. What do I mean? So you see here the price here. Let's go back now. We're on a daily chart. I want to go to the monthly chart. All right. Pay attention to the pink line, okay, on the monthly chart, you see. So we know something also, you see, the price went up and then it went up, you see, and then it corrected itself. Again, this is very corrected. This is 2008, as I said to you before. Now, it tried to go up to display the B corrective wave for traders who understand area wave. Now, it's forming, all right, what we call an expanded correction. 1, 2, 3, 4, 5. Now, we are in the fifth wave now. Down. This is the C corrective wave for this Hewlett-Packard, and a lot of area wave traders were buying now. But you need to align that with the market itself, as I said to you, but I will not dwell on that. So we were here that time, and the price was. So you can see also that on this monthly chart, we were in fact near support level. You see the pink line? There was a support level where we were when the price was retested. So it's not a bad level. You can see that there was a support zone here, and again here, and again here. All right? But look at the bigger picture. Look again, look again, look again. All right? So we were here that time. Pay attention to the pink line. All right? When the price is going down, all right, the price is looking for a better support level. So the price was here. So it changed direction, went up a bit, display a lower high. After display a lower low, a lower low, display lower high. The bear are still in charge. Though we see a double bottom, we must analyze the price itself. You see 1, 2, 3, 4, but a low, a lower low, plus a lower high is still bearish until, okay, this level hold it. So we want to buy here. If we do not check, you remember we were on a daily chart. If we do not check the higher time frame, the weekly chart, we can miss a lot of opportunity. We can miss a lot of information, because though this support level is not a bad support level, there is a better support level right here where the price now. You see this level here. So if I want to take it here, we must be careful. We know that, okay, there's a better support below. Now it's hanging here like this. It's not bad support. We want to take it. We will draw our warning line. If it did below it, we will come out, because we will be thinking that, well, it's seeking the next support level. You understand? Now, the price here now again, there's a support here. Look below, there's another support here. All right? So you want to, anytime you're about to enter a trade, you want to analyze the risk, okay? You want to quantify the risk. You want to check the higher time frame to see the bigger picture. Traders who understand area wave will be very, very careful. In fact, they will not buy here because they will see that, okay, there is an expanded flat correction taking place here. But on the daily chart, if one is stopping only on the daily chart, like we see here, you see, everything looks gorgeous, and we see a double bottom, we see validation. This is what George has said, all right, and okay, the signal is fired, all right, it's going up, but then everything turns sour and the price return below. You want to bail yourself out quickly, all right? You want to bail yourself out quickly, all right? And you want to know also when, okay, the music has changed, price breaking below the trend line. To summarize this video, you can see that now the demonstration that we have done, though on the daily chart it looks perfectly bullish, all right? If we fail to check, to validate the setup, we can get into trouble. So what I'm saying to traders, the setup, the signal, and the entry point, but we must validate the setup. If we are not satisfied with the setup, we can walk away. We do not have to take it. another thing I need to say to traders, apart from the market principle, we can also use the definition of the uptrend and the downtrend. I invite you now to follow me in the next part of the video when we will discuss, okay, the price itself, the number one indicator. Until the next time, enjoy yourself and be very happy. This is about trading system masterclass part 4, discussing, okay, the importance of a market principle. The higher time frame commands the lower time frame. We must validate the setup, the signal, and the entry point. Thank you for watching, and we will speak to you very soon. We are the TSTW S008 traders.